Hello everyone, my name is Marlena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter. Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, what's been driving the markets in the past 24 hours?
Well, we had Fed Chairman Powell's statements. They were made yesterday before Congress. It was a testimony actually, on the oath. Now, the Fed chairman practically underscored the bank's decisiveness to act in order to curb inflationary pressures, and more or less was not able, though, to actually exclude the possibility of the US economy entering a recession. Now, the Fed's going to be trying to avoid that, but given that the bank has a pretty strong hiking path ahead of it, the way to actually avoid a recession may prove to be quite difficult. And it's characteristic that market worries about a recession in the US economy tend to grow. There were even some former Fed policymakers which are highlighting the possibility of a shallow or a mild recession in the coming months. And overall, I think that was the main driver behind the markets. More or less, yes.
Should I assume that there was a low volatility in the US stock markets as well?
Yeah. There was low volatility in the US stock markets yesterday. I would dare to say that Powell's comments were largely priced in and didn't make an impression. And that tended to keep the US dollar on a low volatility as it did US stock markets. Actually, NASDAQ dropped a bit. However, in the following hours recovered the ground and actually moved a little bit higher. Gold's prices also maintained a rather stable sideways movement.
Great. What's in the calendar today?
Well, we already had France's, Germany's, Eurozone's, and UK's preliminary PMI figures. Those were for June. It was characteristic that especially Germany's manufacturing sector dropped more than expected, which could weigh on the common currency somewhat, given that Germany's manufacturing sector is considered to be the spearhead of Eurozone's economy. And after that, we had from the UK the CBI retailers, which is to show us whether UK retailers are expecting more or less to have an increase or a decrease in the revenue for the coming month. I would dare to say that a drop is expected into the negative, so even less retailers expect an increase of retail sales, and that could weigh on the pound. I would also note later on that we get from the US, the initial jobless claims figure, expected to drop a bit, just a bit, and theoretically it could provide some support for the US dollar, but given the low difference, we may see the release as such passing unnoticed. We would also note from the US the manufacturing PMI figure, which is expected to drop. If actually so, could imply a slowdown in the expansion of economic activity in the US manufacturing sector and thus could weaken the US dollar. And as for oil traders, I would be noting the EIA crude oil inventories there on a weekly basis and could affect oil prices. Now, during tomorrow's Asian session, we get from Japan the CPI rates, and those are for May. Now, the core rate is expected to remain unchanged at 2.1% year on year. Should that also apply for the headline rate, that could imply that inflationary pressures within the Japanese economy have peaked, and if actually so, could weaken JPY as it could ease the pressure from BOJ to practically provide some reassurance of the temporary nature of inflation, which the bank, especially BOJ Governor Kuroda, had argued for so long. So it's a big issue. I would be keeping an eye out, especially on a macroeconomic level.
Great. What's on the monetary front?
On the monetary front, we didn't mention that, correct? We have ECB President Lagarde. She will be attending an EU Council today and could be making some statements, probably reassuring the markets about a possible rate hike in July and in September, with the July rate hike being placed at 25 basis points. Fed Chairman Powell will be making his second testimony before the US Congress. I wouldn't expect many surprises there. So more or less what's already being said should be repeated. The worries about the US economy entering a recession, the bank's decisiveness to actually fight inflation, etc., etc. So that shouldn't be an issue. I would like to highlight, though, from Turkey, CBT's interest rate decision. The bank had its 1 week repo rate at 14%. We have to note here that the Turkish economy experiences very high inflationary pressures. The headline rate is at 73.5% year on year, with food prices possibly being even higher. And that tends to increase the pressure on the CBT to actually hike rates. But on the other hand, Turkish President Erdogan last week had mentioned that the Turkish government will practically try to lower rates even further. Now, should the bank keep rates unchanged, given the high inflationary pressures in the Turkish economy, we may see the lira weakening somewhat, or starting to weaken once again. Mind you that against the US dollar, the lira is already at quite weak levels and has stabilized at such weak levels. At the same time, though, should the bank show any hesitation or even any intentions that it may cut rates even further, as President Erdogan has asked, that could send the lira tumbling. So that would weaken the lira even further. More or less, that should be it on the monetary front. Yeah.
Oh, interesting. Finally, in the commodities market, how are oil prices moving?
Oil prices are still dropping. They broke just below 103 during today's Asian session, late Asian session. The outlook remains clearly to the downside for the time being. On a fundamental level, the worries about a possible recession drive oil prices lower, because it could be expected that should a recession come about, that would weaken the demand side of the oil market. I would highlight also yesterday's AP weekly crude oil inventories, which showed a considerable buildup of US oil inventories above 5 million barrels. And we would note, though, on the other side, that US President Biden has a plan where he would be providing, that should be through Congress though, a tax holiday on oil prices at the pump, which would mean practically a decrease of oil prices at petrol stations in the US and could provide a small boost for the demand side for oil. Overall, though, for the time being, we tend to maintain a bearish outlook fundamentally.
Great. Thank you, Peter, for your time.
Thank you.
And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation today. In front of your screens, we make a start with the USD index, the dollar index. It's the 4-hour chart. Note how characteristic the sideways movement has been practically since around the 9th of May, with the low points being at 105.55 and 101.30 being touched practically around the 27th to 31st of May. I would be highlighting, though, that a new lower boundary seems to have been formed, with the low point being around the 17th. Let's reaffirm this, the 16th of June. So we tend to maintain a bias for a sideways motion between the 105.55, which was tested around the 15th of June, and the 103.20 support line, which was tested again on the 16th. It's characteristic how the Bollinger Bands have converged and have narrowed practically the area at which the price action has been moving. Also note that the RSI indicator seems to be revolving around the reading of 50 lately. That would be since the 16th, 17th of June, also implying a rather indecisive market. Nevertheless, should a surprise occur and say, for example, the bulls take over, we would require clear breaking of the 105.55 for a bias for sideways movement to turn into a bullish outlook, and for the index to start aiming for the 107.50. Should R2 be broken, that could pave the way practically for the 109.90. To the downside, and should the bears take over, we would expect the price action to break the 103.20, which provided some support here. Start aiming for the 101.30, which practically provided support around the 30th of May. So it's a level to keep an eye out. And finally, should the S2 be broken as well, the next level noted would be the 99.60. For the time being, though, we tend to remain biased to the sideways movement of the index between the pre-mentioned R1 and S1. Moving now to Euro USD, which seems to be also moving in a sideways motion between the 1.06 and the 1.0480. It was nice how the S1 level was practically reaffirmed during today's European session. Note the wide drop of the pair, which, if we drill a little bit lower, this is the 1 hour chart, occurred practically on the release of the preliminary PMI figures. It was characteristic how the euro weakened at the release, given that the actual figures were lower than what was expected by the market, considerably lower, and tended to imply, I wouldn't say a wide, but still a slowdown in the economy of the Eurozone. Specifically, Germany's manufacturing sector slowed its economic activity considerably, at least the expansion of it. And that tended to depress euro trade somewhat. Nevertheless, Euro USD seems to have bounced on the 1.0480, and it's trying to recover, but still at rather low levels. For the time being, we tend to maintain our bias for a sideways motion between the pre-mentioned levels, the 1.06 resistance line and the 1.0480 support line. Note that the RSI indicator, despite breaking the reading of 50, remained near it. So that would be another sign of a possible sideways motion and decisive market. Also, the Bollinger Bands, despite the volatility, didn't actually widen. So overall, tend to maintain that the range-bound movement is to continue. Quite interesting. To the upside, and should the bulls take over, we may see the pair actually breaking the 1.06, and we would require that in order to switch our sideways bias in favor of a bullish outlook. Note how the 1.06 had provided resistance around the 19th of May, however, was also the upper boundary of the past sideways movement in the early days of the past month. And as our next resistance level, we note the 1.0755, 155 pips to the upside, which provided resistance here. It was overall an upper boundary for the sideways movement of the pair from around the 23rd of May until the 9th of June, where it broke it to the downside. Higher than that, we also note the 1.0935. To the downside, and should the bears actually take over, we may see the price action breaking the 1.0480, which provided some support earlier on and start aiming for the 1.0355. Note how it was aimed for around the 15th of June and was tested around the 12th and 13th of May. Lower than the S2, we also note the S3 1.0210, which is also our lowest level noted. Let's have a look where it actually rests. Should be pretty far back. Let's drill out to the 1-day chart. Definitely. Not even back in 2016. It's even lower. Weekly. Pretty low. Yeah. It goes all the way back with a touch back in 2002. So that's another indication of how low the pair actually is right now. Given that the S3 finds its last price action back 20 years. And that could be causing the bears to hesitate somewhat. But nevertheless, we should note that the S2 was tested recently, so that should not be out of reach. Moving on to cable, GBP USDs for our chart. Also some sideways movement. Let me readjust those. Also note the wide drop during the European session as practically the PMI figures dropped. However, we have to note here that UK's PMI figures, especially the services sector, didn't drop as much as the market expected. So despite the negative news, on the other hand, there is a small positive note here, given also that the services sector comprises around 60-70% of UK's GDP, and it's the heavyweight for the UK economy. So there was a slowdown of economic activity, at least as the preliminary PMI figures for the service sector show. However, may have not slowed down as much as the market had expected. On a technical level, we tend to maintain a bias for sideways movement, given that the price action quickly floated above the 1.2165, which used to be also our level as a lower level for the boundary movement. However, we could readjust this a little bit to the downside. And widen it a little bit up until here. That would be the 1.2175. Note the touches. Let's readjust this. So it moves from 1.2185 to 1.75, 10 pips lower. Be a little bit more accurate here. And the resistance line could move a little bit lower, just a bit. At 1.2325. Small readjustments being made. On the other hand, that provides us a clearer picture. Note how the price action maintains a range-bound movement between the 1.2325 and the 1.2175. It's not by accident that the widening of the Bollinger Bands, upper Bollinger Band, lower Bollinger Band, have now both converged and have narrowed the area in which the price action can move. At the same time, note though that both the 100 and the 200 moving averages are moving downwards, downward slope, implying that there are still some bearish tendencies here. But for the time being, I would feel more safe to remain in the bias for sideways movement, given also that the RSI indicator had corrected lower given the drop during today's European session, yet remains more or less near the reading of 50. It would be interesting to see how the price action moves also on a daily basis. Not much here. And on a weekly basis, practically unnoticed. So the sideways bias remains. Nevertheless, should the bears actually take over, we may see the pound, let me adjust this, breaking the 1.2175, which provided support once, twice, 3 times, resistance, and start aiming for the 1.2070, while even lower we note the 1.1935, which practically reversed the downward motion, the wide downward motion, which had started around the 10th of June. Let me reaffirm this. Yep, on the 10th of June. And it was able to find the limit on the 4th. Sorry about that. 10th of June it started. Yeah, and it found the limit on the 14th of June. Right at the 1.1935. And then moved upwards, practically testing also once again the 1.2175, breaking, yet correcting lower of the 1.2325. Should the bulls take over, we may see cable's price action rising. First test would be set at 1.2325. Note how it was tested once again here as a resistance line and the support line here. Higher than that, and should the 1.2325, the R1 be broken, we note the 1.2470, which used to be a support line. Here, 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 and here. And should the R2 be broken, the highest level, also note the price action of chart, would be the 1.2660, capping the upward motion around the 30th of May. Actually, it was for a period from the 27th to the 30th of May. Once again, we tend to maintain a bias for sideways motion between 1.2325 and the 1.2175, unless either of the levels is broken, which would switch practically outlook to either direction. USD/JPY. Next. USD actually dropped a bit and moved lower, so we will have to make some readjustments here. Definitely the next support line, I would place it here at 1.3155, even 50. Yep, 50. In green, please. So let's make the adjustments. This line is turning into red as it becomes from a support line a new resistance line. $138.30. $136.75. $135.60. Moving to port lines, making a start with the 131.50. $133 would be the second one. And 134, the first support line, which for the time being is still actually quite far away from the price action. USD/JPY bears have considerable ground to cover between 135.60, which is the price action right now, and the first resistance line, and 134. Note how both the levels were tested. Sorry, let me adjust this. 134 level as support line was tested extensively around here, while the 135.65 provided resistance here. Now there are two scenarios which seem to be most possible. The first scenario would be the downward movement to continue. And in such a case, we may see the price action starting to aim for the 134. That would switch our bias for a sideways movement in favor of a bearish outlook. There is a catch here, and the catch is that the price action has forced the RSI indicator to drop, yet the RSI indicator practically remained rather stable at the level of 50, which would imply a rather indecisive market, pushing the price action to a sideways motion. So for the price action to move lower, the RSI indicator has to drop below 50 and start aiming 30. On the other hand, should the pair remain rather stable, I wouldn't be surprised to see it breaking above the 135.60 and start aiming for the 136.75 once again, and remain within the spectrum between the two levels, two now resistance levels. Both scenarios could play out here. It depends how the American session also will be behaving. I would note though that the 1 hour chart, there seem lower peaks being formed and lower troughs. Some stabilization here once again. We're going to have to wait and see here. Should the bulls take over and for the bullish outlook to surface and dominate, we would require clear breaking of the 135.60, the 106.75, and for the pair to aim, if not even reach, the 138.30 resistance line. Should the bears take over, I wouldn't be surprised to see the price action of USD/JPY breaking the 134 and start aiming for the 133. The pair has showed a couple of times that it could cover the distance within 3 candlesticks. It was very characteristic here. And actually move though to the other direction, i.e. from the 135.60 to 134. Let's have a look now at USD CAD. USD CAD, which continues to revolve its price action around the 1.2170 in a sideways movement after breaking the downward trend line guiding it since the, let's have a look, since the 17th of June, and the breaking occurred on the 22nd yesterday. So practically the sideways motion seems to continue to guide the pairs we have mentioned yesterday around the 1.2970. I wouldn't be surprised to see it breaking below it once again, and the price action to rotate around that level. Note though that the RSI indicator remains near the reading of 50, despite slight upward movement, nothing much. Still seems to remain in a sideways motion here. Also, there are the Bollinger Bands which are converging, tend to imply that. Nevertheless, should the bulls actually take over, I would expect the price action to break the 1.3070, which provided resistance here and here. And if actually so, that would pave the way for the 1.32 resistance line. To the downside, and should the bears take over, to switch our bias for a sideways movement towards a bearish outlook, we would require clear breaking of the 1.2970, and for the price action to break also the 1.2865, which provided support here and resistance here, here, here. So it's pretty valid. And a possible breaking of the S2 would be implying not a dominance, but definitely an advantage for the bears, a clear advantage, which could drive the price action even lower towards the 1.2730. It's an interesting pair. Don't forget on the fundamentals that we have oil prices which are dropping and could weigh on the cat, in which case we may see the pair rising. Let's have a look at the WTI prices. This WTI is 4-hour chart. The price action actually respected, let me adjust this, the 101.25. So some stabilization seems to be in play here. But the price action remains below the downward trend line, which was incepted on the 14th of June. Note the lower peaks, one peak, second peak, third peak, fourth peak. So overall, the downward motion seems to be continued, also verified by lower throws in a row. This stabilization here, though, tends to create some worries about the bears, but given also that we had a similar stabilization around the 17th of the month, I would maintain our bearish outlook in favor, for USD CAD, as long as it remains below the downward trend line mentioned. Also note how the RSI indicator remains below the reading of 50, also implying the presence of the bears here. On the other hand, though, note how the price action has reached and stabilized on the Bollinger Bands, actually the lower Bollinger Band. So we may see the Bollinger Band actually providing some support here. Yet on the other hand, the price action after correcting a little bit higher has created some room for the bears to move in. Should the bears actually maintain control and dominant oil prices, WTI prices, we may see the price action breaking the 101.25 and start aiming for the 97.90. To the upside, should the bulls take over, would require two things for a bullish outlook. The first would be a clear breaking of the 105.10 and definitely the breaking of the downward trend line before the commodities prices actually start aiming for the 107.55. Even a possible breaking of the 107.55 would be required in this case. And that would practically create a new upward trend line guiding the pair, and that would cause us to switch our bearish outlook in favor of a bullish one. Let's have a look now back to in the FX market at the Aussie. AUD/USD, which is forming a downward movement, which should not pass unnoticed. It is the downward trend line starting to form on the 16th of June. Note how we have lower peaks and lower throws, practically forming the downward trend. We tend to maintain our bias for its downward motion. Let me readjust the levels so it becomes more obvious. Here it is, far more obvious. Note how the price action has reached the lower Bollinger Bands practically since the 22nd, that was yesterday morning in the European session. Corrected a bit high after breaking the lower Bollinger Band, yet the bears remained in power and has driven the price action back to the lower Bollinger Band, which currently seems to be serving as a support line. Should the bears actually maintain control, we would expect the price action to break the 0.6850, which provided support here. I would also mention this one, as there was a false break, and start aiming for 0.6730. On the flip side, should the price action stabilize around the 0.6950 and the 0.6850, I would expect it to break the downward trend line we have earlier mentioned, and that would be a first sign of a change in trend, possibly even a bullish one. But for a bullish outlook, we would require clear breaking of the pre-mentioned downward trend line. The 0.6950, definitely a clear break would be required for a bullish outlook, and for the pair to start aiming, if not reaching, the 0.7035 resistance line. Once again, bearish outlook for the time being. Let's have a look at Safe Haven CHF, which used to be stable yesterday and still actually is stable. Let me readjust the levels once again. So there was a drop, which for yesterday in the American session compromised the sideways motion, but during today's Asian session, the pair quickly recovered and resurfaced above the S1 0.9640. We tend to maintain our bias for sideways motion here, given that the RSI indicator, despite dropping, actually has reached the highest level since the 16th of May. Sorry, 16th of June, when we had the wide drop caused by SMB's interest rate decision on Thursday. So practically, it seems that the bears are losing steam and the stabilization comes into play. Also note how the Bollinger Bands have narrowed and converged, implying the lower volatility, which was evident also from prior sessions. Nice. Let's have a look at USD TRY. In a sideways motion. Practically as we left it, and maintain a bias for a sideways motion, but this is a big but, as we have mentioned in the fundamentals. We have CBT's interest rate decision today in the late American session, late European session, and should the bank, God forbid, cut rates once again after a long period of keeping the 1 week repo rate at 14%, I wouldn't be surprised to see USD TRY jumping, breaking above the 17.6 and start aiming for the 18.32, which would be practically, let's have a look. Yep, a record low, a new record low. No, it would not be. There was a movement here. So there was in December last year, when USD TRY actually reached at 18.32, which is also a second resistance line. There we go. But nonetheless, should CBT actually cut rates, I wouldn't be surprised to see the pair breaking the 17.6 and start aiming for 18.32. On the other hand, also a possibility that the bank maintains rates, the 1 week repo rate at 14%, and yet on the other hand, the forward guidance tends to show some hesitation, so some further signs of easing, as President Erdogan has asked, could still weaken the pound. So for the time being, USD TRY would tend to maintain a bias for a sideways movement, given the tight range-bound movement of the pair since the 13th of June. Yet a bullish surprise could be in the cards. Let's have a look here now at gold. This would be golds for our chart. Readjusting the levels. So gold's price action has been revolving. Yeah, let me adjust this. Now gold's price action has been revolving around the 1836 resistance line. It's characteristic that yesterday it jumped breaking above it, yet later on corrected lower and is once again below the resistance level. Now there could be some sideways motion, yet at the same time we see that the precious metal is marking lower highs. I would like to see though lower trows before I call in the bears here. I would like to see the price action dropping below this level, somewhere here. And that could be more or less reaffirming the downward motion, as it would imply that we have lower peaks and lower trows. As things stand right now, I wouldn't be surprised to see the price action stabilizing around 1836, which would be practically breaking this downward trend line here. To the upside, and should the bulls take over, I would expect a breaking of the R1, a breaking of the downward trend line, and the price action to rise and reach the 1870 resistance level, which provided resistance here and here. While to the downside, should the bears take over, clearly, I wouldn't be surprised to see the price action dropping, correcting maybe a little bit higher, breaking the 1807, which provided support here and here, and start aiming for the 1787, which is the lowest level of the price action in our chart, where it provided some support. Let's have a look now at US stock markets. Let's have a look at, okay, sideways movement, NASDAQ. That's interesting. We're going to have to readjust the levels. We have 1, 2. Let's go hunting now. I'm placing the second support line at 11,000. Let's have a look. Definitely not. So 11,030 it is then. The second support line. As we have a touch in green, please, as it is a support line. Excuse me. Let's go hunting now for a third resistance line. And that would be oh my god, that's pretty way back. It is. And we have to go all the way back until 2021. That should be July 2021. Sorry, yes, end of July. Could be narrower, could be set here as well. With a double touch. Being placed at 10,680, which was tested twice, and that was on the 21st of September 2020 and the 24th of September 2020. So we're going back 2 years here, which is pretty low. Let's readjust. $11,030. And once again at 11,490. First support line 12,100. That's a wide range, I know. But note how the price action was able to cover the ground quite easily within 1 day, actually within 8 hours. 12,440. And the final resistance line being placed at 12,935. Okay. Now, given that the upward motion was broken, let me show you the upward motion here. It is. This upward motion was actually broken. So we tend to maintain a bias for a sideways movement initially, with the price action probably revolving or continuing to revolve around the 11,490. Note though that the level was used as a support line and the resistance line, support line. So it could be quite valid. And note though how the RSI indicator has jumped up, bouncing on the reading of 50 and rising. So that could be implying some bullish tendencies here. And we may see US stock markets trying to recover some of the wide drop which occurred last week. That was a week before that even, around the 9th of June. In which case, we may see them start aiming for the 1.21, should the bulls take over. And we would be making a new resistance line, a new upward trend line, based on the higher trows which will be formed. On the flip side, should the bears take over, we may see the price action breaking the 11,490 and start aiming for the 11,030. That should be it. Thank you very much for watching. Hope you found it useful. From all of us here at IronFX, best wishes for solid trading.
Hello traders! Today I will be talking about a few important trading tips. Funding has always been a major concern for traders. Our best advice will be to trade on money you can afford. Never invest money you need for day-to-day needs. For example, never take from your rent money to invest. Set some funds aside, that way you can avoid additional stress during trading and perform better. From there on, assess how much capital you're willing to risk on each trade. analysts suggest that many successful day traders risk less than 1% to 2% of their account per trade. That trading tactic would allow you also to be able to open new positions should the chance arise, as the total of your capital will not be tied up. However, be careful not to fall in the trap of overtrading. Set aside a surplus amount of funds you can trade with and you're prepared to lose, and always remember, it may or may not happen. Who you want to be as a trader and who you are could be different. For example, some traders aim for a home run. That could be a large profit that could take a month or two to be realized. On the other hand, you have traders that are willing to take the same risk to do that same profit in a day or a matter of hours. Even though either scenario is possible, attempting to make a lot of money on a daily basis could impact your well-being, as the stress levels are unbearable. You have to do it one step at a time. Take your time with your trading, but be consistent. Some days choose to stay out and just observe the market and try to learn something new through your demo account. Your goal must be to stay in the game for this long term. This is not a sprint, this is a marathon. You have to prepare yourself for certain things to happen. So keep going at it, whatever the case, just keep hammering away. We always question a trader's ability to be a consistent profit maker when overtrading. Some traders believe that when they trade a lot, there are more chances of making money. From our point of view, that statement could be misleading, as the good trading ideas usually require very experienced traders in order to be enacted upon. Good trading ideas usually have a reason behind them. The reason stands out so clearly that you can't help it but place the trade. However, to maximize your profits, you will need to execute the trade as fast as possible. Financial markets cannot tolerate hesitation. The moment will never be perfect and there will always be something in the way, but your eagerness to trade will make it possible. There is a recommendation which we will never get tired of repeating to our clients. It is to always use a stop loss. A stop loss should reflect what amount a trader is willing to lose with the risk he or she takes on. Regardless if a stop loss is expressed as an amount or as a percentage, it will limit the trader's exposure during a trade. A positive side effect of using a stop loss could be that the trader's anxiety is there, but at lower levels, because the risk is specified and limited, and this allows the traders to perform better. Ignoring a stop loss, even if it leads to a winning trade, is bad practice. Exiting with a stop loss and thereby having a losing trade is still good trading if it's framed by the original trading plan. Remember that the market may turn against you, and at some time it will. At that moment, make sure your capital is protected. When trading, you must keep in mind that there is always a certain risk factor in play. You may win, yet you may lose as well. That's a key reason why you should set some funds for trading aside. Trading your rent money, for example, is bad trading. If you're trading money required for everyday needs, it's only natural that your psychology will apply the feeling factor while trading, and could lead you to bad decisions as anxiety rises. So set some funds aside for trading purposes only. At the beginning of each trade, always assess how much capital you're willing to risk on each trade, in order to determine the trading size and set your stop-loss level. All of that will relax your psychology and allow for more rational trading decisions to be made, thus enhancing the probability of gaining while trading.